DraftKings just beat EPS and revenue expectations and is now the number one gambling stock, the number one gambling company in the United States. So, great quarter for the company. I'll go over what you need to know about this quarter, and then I'll get into some other analyst upgrades that we're seeing on Wall Street. And at the end of the video, I will give you a price prediction for DraftKings. So, with that being said, let's dive right in. So, like I said, they are the number one sports book in the US. And we can see that their market share has grown over the past couple quarters. So we can see here that in Q1 of 2023, we had a 27% share in the gambling market. That increased to 30% over the past quarter. And now we're actually at 33%. So we're seeing continued growth over the past couple quarters. In Q2 of 2021, we were just at 21%. So the platform on Kings is really starting to emerge as the favorite for gamblers. And DraftKings would say basically that they have invested a ton in technology, and it's really starting to show with their market share dominance in the space. So this is a pretty much the chart of the earnings call. Really, you should keep this in mind. This is the number one growing gambling company in the entire stock market in the US in general as well. And then I'll go over a couple notes you should keep in mind about the call here. So right now we can see that older states are generating significant positive contribution profit, and newer states are generating positive contribution profit faster than previous states. And then DraftKings is largely at scale, and we therefore expect attractive adjusted EBITDA flow through percentage on incremental revenue. And DraftKings says the best is yet to come. The company is excited for the future and to look forward to presenting our latest views on U.S. opportunities, sources of competition differentiation, and the core business drivers at the company's Investor Day on November 14th. So the company is hosting a Investor Day on November 14th. So put that on your calendar. Keep that in mind. So structural sportsbooks holding percentages was 9.5% in the quarter and ahead of expectations. So this is really, I can't say this anymore. This is a great quarter. The company now has 1.1 billion in cash and cash equivalents, which is essentially flat compared to the cash that the company had last quarter. And then adjusted gross margins was in line with expectations and improved almost 300 basis points compared to the third quarter of 2023. Adjusted gross profit margin on a year-to-date basis increased by almost 500 basis points compared to the first 9 months of 2023. So external marketing and fixed costs were in line with the company's plans as they executed the football season kickoff plan and continued to exert discipline against the competition expenses and vendor-related costs. And then when we look at the customer-friendly sport outcomes, so sport outcomes in the third quarter, including college and preseason football game results, were favorable to the customers. Outcomes resulted in headwinds to revenue and adjusted EBITDA. So basically that means that people on the apps were winning. Funny enough, if you're a user of these apps, you'd be like, really? You can do that? Yes, you can, which is funny. And then they're expected to launch in Maine in 2023, so that is a potential growth driver. So the company is very excited about that. So that will be a positive growth driver for this company. And then the company also touted strong customer retention and engagement. So customer retention and engagement, as well as new customer acquisition, continue to exceed expectations due to ongoing product innovation and marketing optimization initiatives. These trends account for 165 million of revenue improvement and 90 million of adjusted EBITDA improvement. So the company now expects adjusted gross profit margin to be in the range of 44 to 45% as an improvement from the previous guidance range of 43 to 45%. So very slight improvement, basically like a half percentage, but still good to see that they're moving in the right direction. And then the company continues to expect fixed costs to grow less than 10% and external marketing to be consistent with prior guidance, even when including our investment in Maine. And then, this like I said, this quarter really is a great one. And then in fiscal years 2023 and 2024, this includes all of our existing jurisdictions as well as sports betting launches in Maine, Puerto Rico, Vermont, North Carolina. So there are more launches coming up in the next couple years. Like I said, should be in Puerto Rico, Vermont, and North Carolina as well as Maine. Vermont has authorized mobile sports betting and is in the process of, kind of allowing DraftKings to do this themselves. These states collectively represent approximately about 5% of the U.S. population, and all state launches are pending market access. So these may or may not happen, but they odds are that this will happen and will likely act as a positive for the company. And then looking forward, approximately half of U.S. population does not have yet regulated mobile sports betting, and nearly 90% of the U.S. population does not have regulated iGaming. So that's another opportunity. And the company's mobile sportsbook launch in Kentucky has been fantastic, with results that are consistent with recent state launches. And the company expects to be a top operator in the state. So they're rolling out to more economies, or actually more states, which will be a growth driver for this company. And then, like I said, the company beat on EPS. Just to give you some numbers, the company beat EPS by 9 cents. Still not profitable, obviously. And then revenue of 790 million beat by roughly 100 million. So, definitely positives for this company. And then average revenue per MUP was $114 in the third quarter, representing a 14% increase compared to the same period last year. And given some very bullish ratings on this stock. So I'll read you some of the notes from Wall Street. So on Wall Street, Needham reiterated an outperform rating on DraftKings following the report. The firm sees DraftKings as a leader in the emerging North America online gambling market, noted that the $35 billion market opportunity. And then their analyst thinks that legislative environment is overall supportive of greater market access, which is called a win-win for customers and states. We see upside to our bull case industry total adjusted, the industry TAM of $50 million, for which we see a higher likelihood paying out than our bear case of just 18 million. Within the market, we believe DraftKings has a sustainable customer acquisition strategy. We continue to drive its first or second place position in states. We expect margins to scale with the tech stack transition to SB Tech from Cambia, benefits of national versus local marketing, and reaching terminal market access penetration. And then we also heard from analysts at Jefferies, which backed up its buy rating and a price target of $54. And then Truist put out a note as well and said the firm continues to highlight DraftKings as one of the best growth stories in the gaming sector and has strong convictions that DraftKings will be a sustained winner. So this is all very positive for the company. Wall Street is seeing this earnings report as very bullish, and we see it in the stock price, right? The stock price is up 8% today. But with that being said, let's give a price prediction for DraftKings for those traders that are out there, for those that are maybe looking to get in at a good price. Always happy to go through the technicals and give a price prediction. So we moved over all daily moving averages for the first time since October 17th. This company has been outperforming the broader market since September. So I believe this outperformance will likely continue on the backs of this bullish earnings call. I think in the short term, we'll see a move up to about $35 over the coming days to weeks. And then longer term, I think we'll probably move up to $44. But just to explain my $35 prediction, this is where shares had topped out in August. So it would be logical to see some topping out around this level over the coming days. We could see some consolidation around that level. But overall, I think the stock is very likely to continue higher, up to about $44. I picked this level. It's not random. It's basically where the stock had bottomed out in July and May of 2021. It's also where shares of 2020. So past resistance, or excuse me, past support acts as new resistance. I believe we see this $44 level act as resistance. I think this stock is going to be headed. This is a great growth story within a sector that is growing at a very fast pace. So I like DraftKings long term. It's one of my favorite stocks on the market. And with that being said, I hope you enjoyed this video. If you did, please leave a like and subscribe, and I'll see you here next time.